What's going on, traders? Cleveland here. In today's trader tips, we're going to be talking about how to define a trending market. So first of all, why do you want to trade in a trending market? Well, guys, again, the trend is your friend, right? That's the coinage that's widely used in the trading community because, well, statistically, if you trade in the direction of the overall move, you're more likely to catch that move, right? So that's why reversal trading and different style of trading is a little bit more, it's harder to conceptualize because, again, statistics, guys, you want to trade in the direction. So that's what we do here at MotiveFX, and that's what we teach, and that's what I'm just going to bring to you guys, being able to define your trend. Now, if you're swing trading or day trading, a trending market looks completely different. I can be on a 30-minute time frame and the market be trending, and I coin that as trending. You can be swing trading. If you look at that same 30-minute time frame, you can be consolidated on those higher time frames, and your market won't be trending, right? So I'm going to go into the charts and I'm going to show you guys how I define a trend, and so that way, maybe if you don't conceptualize the way I do it, I'm going to also give you guys maybe tips if you're swing trading, how you can see when the market's in a trending situation, when it's consolidated, and then that way, that's when the opportunity arises for you to actually get in on those moves, okay? But what there also is, you got to think about pullbacks and breakouts, okay? Are you a pullback trader? Are you going to be catching the trend when it's at a retracement? Or are you a breakout trader? Are you getting in the market when it first starts to make newer highs or newer lows, okay? So that's something we're about to get into. Let's pull over into the charts. All right, traders, so right now you're looking at my setup for my intraday trading strategy. It looks a little bit similar when I'm day trading, but for my intraday strategy, I do have to use the multiple monitor setup. This is my key level screen, so I'm looking at key levels here on this monitor, and I'm taking breaks from certain key levels down into other key levels on my other monitor, okay? So if you guys ever get a glimpse of me actually talking, you'll see that's what I'm doing. This is on my Mac. The portrait mode computer is where I'm using my, where I'm analyzing breaks from different key levels, okay? So if we look at this GBP USD here, this right now, I'll blow this up. You would definitely coin this as a consolidated market. We hit Brexit. Once Brexit happened, guys, we really stuck here. I think this is a 38.2% retracement. We got stuck down here in these lows, okay? The market tried to rally up multiple times and it's failed, right? So again, you would coin this as consolidated if you're doing swing trading, but if you're intraday trading, guys, you have a lot of beautiful moves from the low of these ranges to the high of these ranges. Now, granted, you can definitely catch some nice swing positions from a low of the range to the high of the range, but those are really the only opportunities you have as a swing trader. It's dangerous to play the middle in any kind of consolidation. There's many reasons why, but as an intraday trader, you just have a lot more opportunities, and I'll show you as I go deeper into the price action to actually find the trend, okay? I don't see a trend yet, okay? I don't have that statistical edge because I'm still playing this consolidation. So if I go to the 4-hour, that's my next time frame that I usually look at. I can even zoom in. I'm just really able to start to see actual key levels, right? I can see retracements. I can see where the market was taking breaths, where you have market participants exiting and entering, okay? I mean, this is what you want to start to discover, guys, the actual key levels that you're going to be entering in off of these different time frames, all right? So I'd be analyzing this 4-hour, and maybe I'm a retracement trader. Well, I'd like to see the market take a breath, and then I'd assume that, hey, this is the highest it's going to retrace, and I'd get in, okay? Let's say I'm a breakout trader. Well, I'd be looking at certain levels for the market to break for a certain low, and I would get in, okay? So breakout trading, it can be a little bit dangerous. Retracement trading, it can be a little bit dangerous. They both have pros and cons. I coin myself as a very, very well-versed breakout day trader because I just have a lot of rules and revolved around how I actually get into breakouts, okay? I can do retracements sometimes, but I'm usually only doing retracements when I'm doing swing trading. Once I go to this 30-minute time frame, you guys will really be able to analyze and see how trendy this market is. Okay, we came in from a high. If you look at the left of our screen, if you look to the right, we're now at a low. Okay, so now I'm really coining this as a trending market. Now there are areas that you got to stay away from where you have opportunities to lose, and this is where the actual experience comes in. You being able to avoid situations like this. Okay. So this is where people trade. Novices trade, all right? If you lose money, you're probably inside of situations where the market's consolidated and you're expecting this or that to happen, you need to avoid these scenarios. This is where you lose money, okay? The better you can become versed in understanding how to stay out of consolidation and play in the actual moves, because if you notice, guys, it's not often that the market's actually truly even trending, even within this nicely displayed trending move from a high at 33.32 all the way down to literally over 400 pips to the low at $1.29. Okay, so it's very important that you guys understand how to stay out of the noise, which is what this is, and play in the nice meat of the move. You got to be able to discover these types of triggers here. Okay, so it could be fundamental, it could be certain type of technical analysis lining up to actually sparking the market's momentum. There's a lot of things that you got to learn how to discover, okay? And if I go to the 5 minute, now the 5 minute can get very noisy. I'm not looking for key levels on the 5. I'm looking for my key levels on the daily, on the 4 hour, and sometimes the 30 minute. This is my entry time frame. So this is where my precision comes in, okay? So I use more support and resistance lines and levels on my 5 minute, on my 30, and on my 4 hour, and on my daily. I'm using zones, and there's a big reason why. Okay, I'll make a video about that very soon. All right, so guys, that's how I try to define my trend. My trend is defined here on this 30-minute time frame as an intraday trader. This is what I'm looking at on my other monitor here. All right, on that 5 minute, I'm really looking to get in the market based off of breakouts on that 30-minute time frame. Based off of breakouts from that 4 hour time frame, okay? And the daily kind of just gives me the momentum for the week and shows me that overall general move, okay? Now, if you're swing trading, you got to pull all the way back, right? If you're swing trading, I mean, at the end of the day, right now on this GBP USD, you've been in a very ranged-bound scenario. Hopefully, you've been using some kind of ranged-bound strategy where you're picking the highs and the lows. All right, so this obviously isn't the best swing trading market. But if I pull over to the GBP AUD, you guys will notice this has been a very, very liquid market where if you've been swing trading, you've had a lot of opportunities. Okay, this is a weekly time frame. All right, so you can notice here, based off of this being a weekly, look at this amazing trending opportunity. All right, same thing from the sell side. Look at this amazing trending opportunity. All right, so this is what you want to see if you're a swing trader. What I showed to you previously is what you want to see as a day trader. We both need trending situations. It's just the time horizon that you're going to be actually analyzing the charts to get those trending situations, okay? So it's very important that you guys are using the monthly as a swing trader. It's very important that you guys are using the weekly as a swing trader, okay? And you're probably entering into your levels based off of daily and 4 hour price action. When I swing trade, I really swing intra-week. So I don't like holding positions over the weekend too much. So I'm really looking intra-week to see what's going on and if I can catch any kind of retracements or any kind of breakouts within the week, within that weekly time frame, okay? So if you guys have any questions, if you're still confused about how to define a trend, just let me know, hit me up. But I think I gave a pretty good description on how to execute on that here, guys. Remember, you want that statistical edge, okay? So boom, moving on over, guys. If you need any more help, let me know. All right, traders, I hope I was able to help you define your trend and define the trend for your trading style, because remember, guys, the statistical edge in you being able to execute within that move is if you can coin when a trend is, okay? So, guys, your profit is my motive. Like and share this video if you enjoyed this content. Other than that, guys, I'll see you soon.